Hello, good afternoon. It is my extreme pleasure, again, my name is Dan Roach, I'm a Vice President with Sapient Consulting Public Sector, and it's my extreme pleasure to introduce the next speaker, Sunil Sabharwal, to the stage. Mr. Sabharwal serves as the alternate executive consulate to the International Monetary Fund. He was nominated to this position by President Obama in May 2015 and reconfirmed by the U.S. Senate later that year. Since then, he served as the sole voting board member from the U.S. to the IMF, and in that capacity, has been responsible for casting the sole U.S. vote in all IMF decisions to include lending, surveillance reviews, policy issues, and key budget and personnel matters. He also serves in the IMF's budget and liaison committees, where he maintains board-level relationships with the World Bank, UN, and other international organizations. Mr. Sabharwal took an active role in shaping the IMF's financial technology initiatives and risk unit as well. This includes focusing on all Fintech initiatives, such as the IMF's research on Fintech, remittances, as well as its high-level Fintech advisor panel. He also championed the gender diversity initiative at the IMF board level. On behalf of ACT-IAC and all of the sponsors today, I'm very, very happy to introduce to the stage Mr. Sunil Sabharwal.
Thank you very much for that kind introduction. I'm sure a lot of you guys asking about why someone from the IMF on earth are we speaking about blockchain here when our role is really to bail out countries. Partly I'm going to tell you how much actually the fund has done on this topic, and just to add a little bit, my role at the fund is, so I'm not staff member, I am the U.S. board representative. I like to say that we do everything and nothing. It's a resident board that meets 3 times a week, 24 board members representing 189 member countries. The U.S. board only represents the U.S., about half a dozen board reps only represent themselves, China, etc., and the other ones representing constituencies, all the other countries. So with that, if I could have my presentation. Got it. There you go. Just that screen showing. There you go. Okay. So the IMF has some of the world's best economists. They're not the best PowerPoint guys, but we'll do our best here. So the IMF's interest is really arising from its role in ensuring that the international monetary system is safe, and therefore we really ensure this by 3 distinct activities. One is what we call surveillance. Surveillance is probably the most important and the least understood activity of the IMF. Country teams go out to 189 member countries every year and write a thorough report on the macroeconomic fundamentals of that country. So it looks at the financial sector, labor, monetary policies, fiscal policies, structural policies, and presents a kind of a health check on the country that gets presented to the board for its formal discussion and approval. The idea behind this is really to try and identify issues that arise ahead of time in order to provide some recommendations so the countries could take care of that. We refer to this as Article 4 consultation because it's embedded in the Article 4s. A very big piece of this work is financial sector surveillance. Are the banks well capitalized? Is regulation appropriate? Are they providing adequate financial inclusion? Is there over-lending, etc.? The multilateral surveillance is is a set of reports that get published by the IMF twice a year. One actually will be in about 2 weeks' time during the spring meeting of the World Bank and the IMF, and then the other one later in the fall, which is the annual meeting. The World Economic Outlook, the Global Financial Stability Report, and the Fiscal Monitor. These are very comprehensive and I would say very important reports because they provide an outlook to the rest of the world on the basis of what the IMF is thinking in terms of global economic growth, broken down by regions and countries, but also emerging issues. So I've had the benefit of yesterday participating in the board meeting that actually discussed something that will be released in 2 weeks' time at the spring meeting. So you are the first ones in the public who are actually hearing some of this information. The GFSR, the Global Financial Stability Report, identified 5 vulnerabilities that they see as emerging. And this is done by the Monetary Capital Markets Unit of the IMF. I think it's interesting if I share these with you. Number 1, asset valuations. Asset valuations very high. We see risk in that. Number 2, credit quality. Credit quality has gotten worse around the globe. Number 3, crypto assets. I don't think I need to comment. Number 4, emerging markets and lower income country vulnerability. And here what we mean is high debt levels and also a vulnerability to liquidity issues, and we would include China in here. And number 5, more specific to the banking sector, there is a currency mismatch in the bank's balance sheets. In other words, dollar lending without adequate access or without adequate dollar resources. The second thing I'd like to identify from a set of these reports that is very interesting, it relates to digitization. The fund has tracked, together with the World Bank, various metrics, including mobile penetration, between 1990 and let's say today, 2017. It is very interesting that, as of today, mobile penetration globally is over 80%, and it is higher than water penetration. It is higher than certainly secondary school penetration. So if any one of us would have asked 10 years ago that mobile penetration, there'd be more people with cell phones than with adequate water, I don't think any of us would have guessed that. But that just shows the digitization, to some extent, that is occurring globally, and that is not to be underestimated. So moving on from surveillance, lending, of course, what we call programs is what everybody knows about. The IMF is there to come in as a lender of last resort. We refer to it as the world's firefighter, and basically address countries' liquidity needs, balance of payments issues, and we have a number of different programs to address that. Let me also briefly mention capacity building or technical assistance, which is basically the IMF's consulting to the countries on issues that we have identified as problematic, whether it's building some capacity at the central bank level or taxation or labor legislation. So the Article 4 consultations tie in with the technical assistance program of the IMF. So the work on Fintech, and here we call it Fintech, but of course we very much regard blockchain as part of that, because we look at it from a financial services, financial integrity perspective. And you'll see that this is not something new. The first paper by the fund was actually issued January of 2016, more than 2 years ago. It was kind of an early paper, which then on we issued another paper on financial technology, where we looked at the impact of fintech innovations, both on the opportunity side, financial inclusion, but also on the risk side of things. In the last 2 years, we've all witnessed a phenomena of de-risking, which is the loss of correspondent banking relationships around the world. Many pockets of the world, dozens of countries were left without any way of getting in funds, either remittances by individuals or for businesses, as a result of a lot of the large central clearing banks basically shutting down, leaving those locations. So that has become a real issue over the last couple of years. I would say that it has now stabilized, but it's something that we are paying attention to. The Managing Director, Christine Lagarde, has made a number of speeches on the topic. I've mentioned the GFSR report just now that has specifically addressed cryptocurrencies. The fund has created a high-level fintech advisory panel that is advising the fund and its staff. We've also launched an iLab, which serves as a collaborative space for private and various international public sector bodies, corporations to come in and discuss the trends on these issues with us. So, our views on crypto assets and blockchains. And you've heard a lot of this today, but I think for the record, it's probably worth repeating that we, the fund, do see significant potential in the underlying technology to boost financial inclusion, improve public service delivery, and of course also create efficiencies for the private sector. A key challenge is for country authorities to encourage innovation while containing risks. Given the relatively small market size today, crypto assets, in our view, do not at present pose a material threat to financial stability. However, we need to be vigilant because this could quickly increase, the risks could quickly increase, and excessive leverage and risk-taking by investors could eventually provoke market disruptions, and such disruptions could be transmitted across national boundaries. And of course, we are concerned about the pseudo-anonymity, which makes some of these instruments ideal vehicles for criminal activity, including money laundering and the financing of terrorism. Perhaps here it's worth pausing and just explain to you a little work that we have done on central bank digital currencies. So digital currencies issued by a central bank. The fund is working on a paper that should be out in about 2-3 months, looking at this and trying to look at the three properties of money as a medium of exchange, store of value, and unit of account, and see if a central bank could actually replicate in a digital form its own currency. So we're not talking about a new parallel currency, we're talking about the same sovereign fiat currency in digital form. Of course, there are some advantages to this that we've identified. For instance, the instant clearing and settlement, which makes it more convenient than for instance, reserves. It has no physical boundary, unlike cash, which also settles immediately, but requires you to be there physically in the same space. The unit of transaction, of course, can be indefinitely divisible, which is advantageous for cross-border and micropayments. Of course, and I'll come to that later, we understand all the risks and issues that this one raises, but I would say about 4 or 5 countries have already attempted or expressed some interest in issuing their own digital currencies. It's probably premature, but there is a movement underway. Let's see. So we see some opportunities and challenges from fintech and crypto assets. I've spoken about the potential for introducing new financial services, efficiency gains in the financial sector, financial inclusion, and financial deepening. Here, what in many countries we find 67, 80% of the population have access to no banking. We also find in certain countries 80% of the lending is going to have half a dozen companies, neither of which are very satisfactory. We see there could be opportunities for better payment systems, new central banking services, improve public service, tackle corruption. In fact, the fund in cooperation with a number of private and public sector partners led by Citigroup, a project called Tech for Integrity, Technology for Integrity, T4I. I don't know if you've heard of it. It was an almost 2-year effort by Citi. I think the couple of the winners were here earlier today. The fund partnered in that and actually gave it I would say quite a lot of visibility, because the final event, the final award event was held at the fund with Jim Wolfensohn, former president of the World Bank, presenting, bringing the fund in. So really putting at front stage, I would say about a dozen leading technologies that were there to combat fraud and corruption. And I think it's with these kinds of efforts, and these were all private sector solutions, and they were not necessarily all startup companies. They could have been a part of IBM or Microsoft. So with these kinds of exposures is where the fund tries to help, in this case, better governance and corruption at the national level. The challenges, this one probably knows better than anyone else. Of course, we are concerned about containing risks. We are concerned that both fintech and crypto are very interconnected. Operational risks, we're concerned about consumer protection measures. So, but I would say that we are open and encouraging the work on this. We're not yet concerned about financial stability. To our estimate, total market value of all the crypto assets today is about is less than 3% of the total balance sheets of the central banks of the G4. So the 4 largest central banks. So we don't feel that there's a systemic risk yet related to crypto this day. So what could or what should the fund do about it, other than promoting some of these ideas and bringing them to the fund in the various different fora? Our view is that everybody's coming at it and taking a piece. And in some way, this is maybe my most important message here, is that you have nationally and internationally various bodies. You have the FSB looking at it from the financial stability perspective. You have the IAS from insurance, IOSCO for securities, CPMI for payments, the Basel Committee for banking, FATF for AML CFT. And first of all, they're all looking at it from their own perspective, which is deep but narrow. Secondly, their membership is very limited. 20 countries, G20 for instance. So there is really no single body out there that is looking at this issue on a global basis holistically. And I would say that with the broadest of membership that the IMF has, with the fact that it studies the financial services sector and the macroeconomic picture of every country every year, together with the World Bank, which comes at it from a slightly different view from a development perspective, but it's probably not a better entity to try and bring this together. So that's why the managing director, Christine Lagarde, has decided to take a leadership on the matter. And you will be hearing, if you're around Washington in 2 weeks at the spring meeting, a lot about this, what the fund intends to do going forward. Oops. So, finally some pictures, and this must be not from an IMF person. So, actually, it's two publications that I refer to. So, nothing to add there, and just again, I would encourage you all. I'll be around here later, right after this presentation, to come and speak to me. We really want to bring in as many ideas, private sector, public sector, into the fund, into the iLab, talk to our interdepartmental teams so we learn from you, and I think that we are in a very strong position to try and pick our best practices and spread them around the world, at least the awareness of them. And I think with that, I just want to conclude that as I said, it will take coordinated effort, leadership by a multinational organization, the private sector, and governments to address these issues. And I think the IMF, with its practically universal membership, is probably as good a place as any. And with that, thanks for your attention. I'll be around here later on if you guys want to have questions. Thanks.